Good afternoon, everyone. We welcome Mr. Ashok Atluri, Chairman and Managing Director of Zen Technologies, Mr. Afzal Malkani, CFO, and Mrs. Shilpa Chaudhary, Whole-time Director of Zen Technologies for 3Q FY24 concall. Over to you, sir, for your initial remarks, and once your remarks are done, we will open the floor for question and answer.
Good afternoon, fellow shareholders and prospective co-owners. Thank you for joining us for this Q3 FY24 earnings call. Our performance in Q3 and the 9 months leading up to the FY24 have been unprecedented, setting new benchmarks for our company. We are witnessing what is shaping to be the most successful year in Zen's history, and both in financial terms and also in terms of the number of orders that we have got in the order book position. In the current year, our innovation-driven focus. I always have been saying that look at Zen as an IP play, because there is so much of hidden asset in the IP. Because what happens is whenever there is a register, whenever we book do R&D, we write off those costs, and those costs result in but those costs, there is a hidden asset there, IP being created, and we assert that through IP patents. And we have in this year we have a staggering 15 patents that were awarded to us, underscoring our unwavering dedication to technological excellence and innovation. Now, this is the main thing that Zen does, creating IP, which is absolutely cutting edge for the country, and which is not only meant for India, but we make in India for the world. That's the objective. So this achievement also aligns perfectly with our strategic goals and reaffirms our position at the forefront of our defense industry, especially in the design and development. So during Q3 FY24, we secured orders worth 129 crores, increasing our order book position to 1434 crores by 31st December 2023. And as on 31st December, we had order book position of 1434 crores. And out of which equipment orders are about 1150 crores, and we expect these orders to be executed in the financial year FY25. We are still anticipating a few orders in the next few quarters to ensure that the order book position by the end of FY25 is stronger than the order book position FY24. This will help us. This order book position will help us to grow on the trajectory at which we are launched, the inflection point at which we are, to continue the trajectory growth for FY26 and beyond. We are also optimistic about the promising prospects of the export market. Our long-term focus has been on achieving leadership in several key areas, including development, both live and virtual-based simulators, leadership position in anti-drone market, and expanding our services, especially through AMC revenues. We look to expand our global presence with particular focus on Middle East, Africa, and CIS countries. So overall, given the situation, we feel that we can aim to grow at a stagger growth of 50%, at least for the financial years 26 to 28. So we hope that if this is achieved, we would have hit the minimum goalpost that we have set for ourselves. To support our growth, we have also initiated a lot of changes in the HR policies, technical and manpower, how to attract them. So we are very, very keen. Of course, we started the ESOPs plan where dedicated Zenists have been rewarded with ESOPs, and we want to continue doing that. We expect a lot of talent to be attracted, especially talent who want to make a difference in the world, and who want to create something durable which they can really relish when they grow old. So this is what Zen is all about, making absolutely great inventions and innovations in the defense fields. So by the way, we are also looking at opportunities to expand inorganically through acquisition. Now, this I have been saying for 1.5 years, 2 years. So, normally the time to raise money once we acquire we look at the target is very, very, typically 90 to 120 days. So to ensure that, we don't have to go starting with the board resolution, etc. We passed an enabling resolution at the board to raise up to 1,000 crores, and the same will be, commended to you. So these potential opportunities would definitely mean that, again, I am very, very wary about acquisitions, because I know that, almost 80 to 90% of the acquisitions go bad. So I'm very, very conservative about it, and will ensure that we will really retest. We'll very, very careful with the shareholders' money. We will retest our assumptions and ensure that these are coming at a reasonable price. And with our joining hands with these acquisitions, if they happen, they may not happen. I very frankly, I'm not very sure at this point in time. But if they happen, we'll guarantee that it will be a blockbuster acquisition. So again, we are taking steps because of this expanding that's happening. One of the questions a lot of people ask is, operationally, how are you? Operationally, we feel, as you can see, that we are delivering what we promised. But we are looking at constantly in making it more robust. The supply chain, the procurement, the production planning. We are really on top of the situation, and we continue to work very hard to ensure that there are no operational challenges in the promises that we make. So again, we are on target to meet at least 450 crores during this year, and that's what we promised. And next year, we think that based on the order book position, we should be able to achieve at least 900 crores. And again, up year after that, we are expecting a CAGR growth of 50% for next 3 years. So as we move forward, we are very confident that our strategic investments and relentless focus on our core competencies will continue to drive positive outcomes for the company. And I look fine, and thank you so much. I'm really, really grateful to the shareholders who have stood with us through thick and thin, and we'll try our best to reward them better. Thank you so much. Afzal, you can take over from here.
Sir, you're on mute. Afzal, sir.
Sorry, Afzal, we cannot hear you. Afzal is our CFO.
Can you speak now, sir?
Yes, can you hear me?
Yes, please go ahead.
Yes, okay. So thank you, sir, and good evening, everyone. As you just heard from our CMD, Mr. Ashok Atluri, we are thrilled to report that we have delivered an excellent quarter. I am pleased to provide you an update on the impressive performance of our company in Q3 FY24 and 9-month FY24. Additionally, we are well positioned to continue our growth momentum going forward. Let me begin with our standalone financials highlights for Q3 24. Our total revenue for Q3 24 was rupees 102.26 crores compared to rupees 34.84 crores in Q3 23. The growth in percentage terms is 194%. Our EBITDA for the Q3 24 increased to rupees 48.41 crores compared to rupees 10.27 crores in Q3 23. In percentage terms, EBITDA is 47% of the revenue compared to 29% in Q3 23. The growth in percentage terms is 370%. Our profit after tax has increased to rupees 31.67 crores compared to rupees 7.58 crores in the same period last year. Profit after tax in percentage terms is 32% compared to 23% in Q3 23. The growth in percentage terms is 318%. Out of our total revenue from operation, rupees 98.08 crores, rupees 89.65 crores were contributed by the sale of equipment, while rupees 8.43 crores came from our AMC business. Moving on to the 9-month FY24 performance, then our revenue from operation was rupees 294.56 crores compared to rupees 87.29 crores in 9-month FY23. The growth in percentage terms is 237%. Our EBITDA for the 9-month FY24 increased to rupees 143.76 crores compared to rupees 31.83 crores in 9-month FY23. In percentage terms, EBITDA is 47% of the revenue compared to 34% in 9-month FY23. The growth in percentage terms is 352%. Our profit after tax has increased to rupees 96.20 crores compared to rupees 20.37 crores in the same period last year. Profit after tax in percentage terms is 33% compared to 23% in 9-month FY23. The growth in percentage terms is 372%. Now coming on to the revenue breakup, then out of the total revenue for 9 months, rupees 294.56 crores, rupees 270 crores from the equipment and rupees 24.38 crore was from the AMC business. If we give the breakup of the total revenue of 270 crores in by export and domestic, then our revenue of 80 crore rupees was from export and 214 crore was from the domestic. In percentage terms, 30% was from export and 70% was from the domestic sales. If we go to the segment-wise revenue, then our revenue from simulator business is rupees 195 crores, anti-drone system was rupees 75 crores, and AMC business, as I mentioned, 24.38 crores. In percentage terms, 73% revenue comes from the simulators business and 27% from the anti-drone systems. Moving on to the balance sheet part, Zen Technologies remains focused on maintaining strong liquidity and leveraging its asset-light business model to ensure sustained growth and value creation for our stakeholders. We continue to maintain our debt-free balance sheet. We were able to manage our additional working capital requirement from our internal accruals, though we have achieved exponential growth in revenue in Q3 24 as well as in 9-month FY24. Apart from this, we have a strong liquidity position and we have a cash in hand of about 192 crores. Additionally, our return on equity have increased to 31% and our return on capital employed have increased to 45%. On the working capital front, there is a significant improvement in working capital cycle and our working capital cycle have improved to 93 days. This is due to the efficient working capital management, particularly inventory and receivables and higher amount of advance received from the customers. With that, we conclude our opening remarks and we would now like to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the Raise Hand icon tab available on your toolbar or on the QA tab available on your screen. You may also post your text questions on the Ask a Question tab available on your screen. Kindly turn on your mic when the operator announces your name. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from Girish Gupta and Chartered Accountant. Please go ahead.
Hello, I am audible.
Yes.
Sir, good afternoon, and I am a very long time shareholder from the company. If you remember, every time you are saying that we will change our orbit, and I always ask you when, sir, when we will change our orbit. And last time when I talked to you told me that we have changed our orbit and we are now moving to the next orbit. So there are three questions to you, sir, if you don't mind. First, why you sold your 2% stake to the Tata AIG? There is any you are thinking business that you get from Tata advance. This is little very why the promoter is sold his stake to the Tata AIG. This is the first question. Second question, why you come with the QIP? Why you are not come with the right issue? It will be the rewarding to the minority shareholder also. And last question is, sir, there is a news that DRDO also established their anti-drone system, and they delegate it to the private player like Tata Advance and L&T. So any competition from this side you are acknowledging or not? This is from my side, and and I don't know the Zen technology. I only know the Ashok Athuri. This is from my side. I am not interested in the what the Zen is doing.
Girish, what was your first question? Sorry.
Sir, why you sold your 2.2% near or 2% stake to Tata AIG? You
Yeah,
are
and
finding
DRDO. Those two questions. What is the third question?
and why you are not coming with the QIP? Why if you are come with the
Why
right issue?
not rights issue?
Uh,
Okay, so
and
I don't know.
you are looking any big business from the Tata side? This is my questions.
Yeah, so first thing is why not rights issue versus QIP is I'm giving insider trade. I don't know it will be counted as insider trading or what, but very frankly that if we go for a QIP, it will be at much higher price. So if you want to do something, you should do it now. The rights or whatever you want to do, you exercise it now only in the secondary market. Second is, this question: why did the promoters sell the shares? Very frankly, we have this company 23 years listed, and the sale has, once or twice the sale has happened only to buy the company shares, but we haven't sold the shares to take, some money for our, especially this was done, but not by the core promoters, except for Mr. Kishore, who sold a very small segment. It was done by the non-core promoters in this. And I think, we should give out of the 57%, we sold only 2% of the equity. And I think you should give us that much of leeway in the sense that we're taking some money off the table. and that too not the core promoters, but the other promoters who wanted, who have been holding for 23 years. Actually, we should congratulate their patience in this regard. So I think we'll give that much of leeway. And by the way, we also got a very strong institutional investors. A lot of shareholders always say that we don't have institutional investors. So we got a Bahubali kind of as an investor into our portfolio. We expect, looking at them, maybe other institutional investors will follow them. The third question was DRDO. Listen, this DRDO thing, if you actually Google and see, it's almost, 1.5 year old story, almost 2 year old story, where DRDO actually published and invited people to be given the TOT, transfer of technology. And again, we compete with each other. The DRDO technology is given to Bell. We have competed. We have won in some places. But our evolution, thanks to the advantage we have as a private company, is much faster, and we expect that the focus which DRDO is doing and which Zen are doing are little different, and they don't pose a threat to us, and the technology that they have transferred. In a way, the technology, whatever sales happen on DRDO technology, Zen also benefits because we are also a partner in that indirectly. So that is the overall thing. Nothing to worry on the DRDO front, and again, that's also a IDDM thing. But we have different markets, and I think Zen anti-drone system will be doing extraordinarily well as we go ahead.
Okay, sir. Thank you, sir. Thank you. And sir,
Thank you.
last thing. The next, when we change our next orbit, when we change our
the thing is, whenever I have predicted, I have gone wrong, so I'll not predict. But Girish, another thing, देखिए, सर्कस में आप तालियां मारते हो घोड़े को देख के या टाइगर को देख के, बट मास्टर कोई और होता है वहां पे. वैसे ही कंपनी में there are other people who are doing lot of work. You may think this is Ashok Atluri, but there are other people who actually do the work. I may be standing in front and taking all the thank yous from you, but yeah.
Okay, sir. Okay, sir. Thank you.
Thank you. We have a next question from Ajinkya Pawar, an individual investor. Mr. Pawar, please go ahead.
Thank you, sir. First of all, congratulations for your excellent result. So I have three questions. First one is that in last con call you said that we have bidded for nearly about 500 to 600 crores of order, but in S2 we won only couple of orders worth rupees of 130 crores. So what was the reason behind it? It will be same like that in last year we won lot of order in Q2. So what will be the order pipeline in Q4 and next year? My second question is related to the Goa R&D plant. Sir, it is due to that customer from export that you said in one of our TV interview that they want us to de-risk ourselves, that currently we are concentrated in existing plant in Hyderabad. And my last question was related to the Indian government announcement that they want to, plan anti-drone system on the India-Pakistan border. So any inquiries related to that, sir? Thank you so much for, I have only three questions, sir.
Yeah, thank you so much, Pawarji. I appreciate your questions. So first question was, the order book during the quarter has not been as strong as the previous order book that we gained. Yeah, we expect that the order book, the pace of order book will vary. It will not be very consistent quarter to quarter. Again, I'm saying that FY24 we are almost at the end of it, and we have about 1,400 crores worth of order. By FY25, I think the orders for the current year are almost through. We may get a couple of orders, but FY25 we expect it to be extraordinarily better than FY24 based on what we are bidding currently based on the pipeline. So it's going to get. So don't focus on how much order we got in a quarter, but overall year on year we should be having growth. And with respect to Goa R&D plant, again, you also gave the answer that this, if when we are building the facility, that is mostly to geographically de-risk all our eggs are in Hyderabad now. So what happens if there is something Hyderabad is rendered non-functional? So we have a plan B in that regard. So that is where the Goa plant comes in. And third was regarding the border. So we are in talks with various government agencies for deploying Zen solutions, counter-drone solutions on the border. So, but again, it's a competitive bid, and there may be other players coming in for this. Let us see who who gets the orders in this. Let us wait and see. But we are definitely one of the forerunners in that. Thank you so much.
Okay, sir. All the best, sir. Thank you from my side.
Thank you, Pawarji.
Thank you. We have our next question from Anurag Agrawal from Agrawal Analytical Investments. Please go ahead.
Hi, sir. Am I audible?
Ji
Yes,
Anurag,
please
I
go
can
ahead.
hear you. Please go ahead.
Congratulations, sir, on the amazing result. So my question was regarding, sir, in previous con calls, I heard that we had mentioned the market size for simulator business could be upward of 10,000 crore. And right now, what I could see is that our order book is around 800 crore in that part of the business. And we had also mentioned that we are world number one in simulators in our field. So could you just give me some views as to why do we have such low market share despite being world number one, and in what terms are we world number one? Is it in terms of cost or capability or capacity? Like, what is that? What is your view on that? That's my only question, sir.
So, the thing is that, we started 30 years back, Anurag, and we have been in this field for 30 years. And in the initial 20 years, there was hardly any support from the Indian government, in the sense they didn't have any preference for made in India or Indian made goods or anything like that. We were competing against the world's best, and India is world's largest defense market. And everybody wanted to come here. Every company that was worth its salt said, "Listen, we will go and conquer India as a market." And we were competing with those guys all throughout these 20 years. And we won against them. We won against each and every one of them, and I can name them: Saab, Thales, Cubic, all these companies, big companies, foreign companies, they competed against us, and then they actually withdrew from the market because our products were technically superior. That's what my belief is, and they have not come to this market. And why this? And again, we are not playing a game of getting the technology from somewhere, from XYZ, even DRDO, or imported, and trying to push that product. No, this is completely indigenously ground up from scratch, developed by Zen. And to assert our rights, we have filed patents not only in India but globally, US, in Europe, we have filed these patents. So because of that, so what do I call myself number one is in terms of technical capabilities. Definitely in terms of the market, what we have what we have till now achieved is much lower in the scale, and that is what the next couple of years, somebody was talking about how do I go to the next orbit. That growth will be fueled by our foray into the foreign market in a very, very serious manner, which is happening at this point in time. So, to your question, the answer is we are technically the number one company in the world in land forces simulators.
Okay. So one more question. Recently, I saw that few other companies like Adani Defense and DCM Shriram Industries were also venturing into anti-drone system. And you said our aim was to be at least world number two or three in anti-drone. Uh, how do we see us faring in that space? How do we see as compared to our competitors in terms of cost and technology?
So I think we will have competition coming up from internally from the Indian companies that are collaborating or they are doing their own research. But as of now, till the last tender published by the government of India, with the Indian Armed Forces, there are two tenders published, and we were the only resultant single vendor in that. So I really don't know. But I always tell my the investors that don't look at my earning, my PR releases. Don't look at my statements that I make, but look at the tenders that the government is publishing and who has won those tenders. That is the proof of the people who are actually players in this segment. So, but as of now, we were the resultant single vendor for both large tenders published by the government, and that orders are already with us. So, in future, what could they come up and beat us? I really don't know about it. I don't know how strongly they are working on this. But the guarantee from Zen is this: that we will leave no stone unturned to be absolute world leader, because it is in the interest of the country that we invest a lot of R&D in becoming the number one or number two in the world in anti-drone systems. So that investment will carry, and this is what I tell you, regardless of winning or losing a couple of tenders, that objective, long-term objective of 3 to 5 years are deeply embedded into the IP, that innovative mindset of the company, and we will achieve that the that dominance in the leadership position in the anti-drone systems in the next 3 to 5 years.
Got it. Sir, and could you throw some light on the order pipeline for the next year, if you have any idea about that?
So order pipeline, I will not say, but orders we have said, we already indicated that we'll have at least for 900 crores worth of orders that we'll execute in the next year. So we feel confident that we'll be able to achieve that. Yes. But again, I told you the order book position will be better than what FY 2024 offered. FY 25 should have a stronger order book position, is what my personal view is.
Okay. Thank you, sir. Thank you so much.
Thank you. Yeah.
Thank you. The next question is from Abhishek Shah from Ambit Limited. Please go ahead.
Uh, Good afternoon, everyone. Can you hear me?
Yes, we can.
Yes. Congratulations on an excellent quarter. Just wanted to confirm a couple of points, and I had a question. So, sir, you mentioned that in FY25 we are targeting about 900 crores of revenue versus about, I would say, about 300 odd crores that we'll end up doing in FY24. Is that correct?
No, FY24 is 450 crores. FY25 will be 900.
Okay, and
300
then
crores, we have
saying
already touched 300, almost touched 300 crores already.
right, and then on that we are saying that 26 to 28 we are estimating of 50% CAGR on the top line.
CAGR on an average, yeah, I think it
On
will
an
be little high, little low kind of thing, yeah, on an
Fair
average,
enough, sir.
yes.
So then, sir, related to that, just a question. We had, margins jump up significantly in the current, this year. And so if I compare Q3 24 to 23, we are at 47% versus about 27-28%. So can we assume that we would sustain those margins going forward during this growth phase, or any kind of, color on that?
One thing is, we are very, very cost conscious. We have a cost mindset, which will put even the most miser to shame. So, we have a really, really strong, but we do spend where it is required for R&D, we will spend, for doing heavy experiments, we'll spend, but where it is required. Otherwise, we are very conservative. So due to this conservativeness, so the percentage of the EBITDA target internally set is about 35%, but this quarter we have exceeded that. But what we aim is that in a year, in a whole of the year, at least 35% EBITDA should be there. So that is what we are aiming for the year. But I think this year may be better than that.
Understood. So, and last question is, you did talk a little bit about the QIP. Any color on what the use of these funds would be? You mentioned acquisition, but anything else that you all are thinking of?
No, as of now, our mind is that basically for the operations that we are doing, our order execution, we don't need any funds. We have enough sufficient funds internally. And if this raise is activated, that means to say that we have probably identified in the process, at least in the process of identifying or identified some acquisition that is very, very synergistic with the company's operations. Yeah, only then we will be doing it. Otherwise, we may not do this raise at all.
Perfect. Thank you so much. And again, congratulations on a great quarter.
Thank you, Abhishek. Appreciate it.
Thank you. The next question is from Sanjaya Satapathy from Ampersand Capital. Please go ahead.
Yeah, so I say congratulations once again for the fantastic result. Can you hear me, sir?
Yeah, I can. Thank you. Go ahead.
Now on the result, we are seeing that your profit margin of the company is jumping up and down quite a lot, though it is extremely healthy. And even in the past, you had said that you were comfortable at 25% margin. So how do we look at your profit margin going forward?
The 25% has always been about PAT, profit after taxes,
Exactly.
35 EBITDA. So, the very frank, the thing is that this is what we have said, that is a conservative target. Very frankly, the one thing about the Zen's accounting department is they report what is there. They don't, there is no creativity involved. That's not a profit-making division, but a reporting division. So you will get that fluctuation. So the why the fluctuation is because of the combination of different product. For example, if I had done simulators more, simulators have a better margin, so it may be having more than that. But on an average, we expect it to even out to 20, that 35% EBITDA and 25% PAT as we go ahead.
Understood. And sir, you were giving a guidance of 450 to 500 crore. Right now, you have removed that 500. Is it some kind of a guidance cut, or you just want to be more specific?
So yeah, we have said 450 plus crores. We have Munimjis like you watching us, so we have to be very careful. But thank you,
Understood.
thanks. You absolutely told the right thing. We did say 450 to 500 crores, but now we are saying 450 plus crores. But let us hope that we achieve the target that you have in mind. Yeah.
Understood, understood. And so, the last thing, coming back to your guidance, sorry, your QAP plan, and also this is the first time, possibly, as far as I know, that you have given a guidance all the way to FY28 almost. So, have you done any due diligence in terms of acquisition, or this is just a matter of statement of intent? And so your company, which is asset light and also not too many employees to that extent. So, are you aware of the complexities that will be required to do such a large ticket acquisition? Because 1,000 crore is not really a small number.
Yeah, I'm very aware of that, Sanjay. I really, I am like you, like owner of the business. I know that anything you raise, there is a and especially if you're raising debt, the equity, it's very, very expensive. I actually abhor raising equity, but except where really necessary. So, to your question, yes, again, as I said, that we are exploring multiple companies at this point in time, and we are not sure whether it will really become it will convert it into actual acquisition, or it is the discussions may fall through. Yeah, but whenever they happen, we will intimate, we will raise the QIP, and we'll be very careful in deploying this QIP fund. But we'll raise only if there is a target inside. Otherwise, we will not be going for this QIP at all.
Or rather, to be very clear, that you will complete you will sign the acquisition deal and then do the QAP. Is that how it will be?
That's right. That's right. Yeah. So the time to raise the money. When we talk about this thing, there'll be exclusivity clause. The time is usually between 90 days, or maybe 90 to 120 days. So we want to finish everything by then. We don't want to go back and say we cannot raise it. So we are preparing the ground for that. It's a very low cost operation that we are doing. Low cost, no cost operation. Taking that and keeping it ready. As they said, keep the dry powder ready if you want to shoot a flying bird. So that's how we are trying to keep it.
Understood. And so now, when you talked about the FY28 targets, those are of course not linked to these acquisitions. And
No.
as you
So these
explained,
are all
although
okay. So yeah. Comfort, to give you the comfort. No, they're not linked to acquisitions happening and then the targets coming. These are based on the current situation that we have, the current interaction that we have based on land forces and counter drone simulators. Yeah, counter drone systems. Yeah, that's right. Yeah.
and so if I can just ask the last question, that that big picture target that you have given, you will reach almost 3,000 crore kind of turnover by fiscal 28. Will there be a dramatic shift in terms of your mix, both in terms of drones and training, as well as India and exports?
So I think the percentages may be maintained, but this is a very far-fetched. I think very difficult to predict at this point in time. Which products will actually take over. But I think I would typically go both, say, 50-50 for anti-drone systems and simulators, and at least 50-50 for exports and domestic. But I expect the exports will overtake the domestic sales by that time.
Understood. Thanks a lot, sir.
Yeah, thank you.
Thank you. We have our next question from Manan Shah from Moneybee Investment Advisors. Please go ahead.
Hello. Yeah, hi. Am I audible?
Yes, please go ahead.
Yeah, hi. Congratulations on a good set of numbers. So, again, my question was again on the acquisition side. When we are talking that the existing business, can be scaled to 10x of what it is currently, why even look at acquisitions and where we have our plate full and diversify into something which we have not built ground up and rather concentrate on our existing core competencies, or do you see any gap in our portfolio that you're looking to fill through this acquisition?
It's a brilliant question, Manan. And basically, I'm like that. Less is more. Do less and try to leverage it more. That's a Zen philosophy also. To your question, that why are we trying to diversify so much when what we have in hand is so good? Peter Lynch famously said, "Don't for investment in stocks." He had said that don't pull out your flowers and water the weeds, kind of thing. So but here in this case, we are very very focused, and what we think is the opportunities that we have are already in a way in a auto seller, auto mode, and we need to protect this thing. There is no doubt about that. So while protecting, can we increase add products that make sense, and can almost 70% of the effort is covered by the current effort, and only 30% incremental effort is there. So there's a proper definition of synergy. Even it's the most abused word in management. But there is only when we see that there is a synergy, and we can actually push the products without compromising on the focus on the existing range of products, will we go with them. Otherwise, it's not that just for the sake of showing, we will acquire some company that has no synergy with us. We have no value addition in that. No, we will actively avoid those kind of acquisition that make sense and will help us multiply the targets that we are giving. Only will be the acquisition will only happen there. Yeah.
Okay, understood. And my next question was on the R&D side. So, going forward, the incremental R&D spends that we'll be doing, towards which side of business are these going to be, and whether these will be to develop new products or, to keep updating the current products and improving
So
their capability.
yeah, though both will be there. For example, anti-drone systems improvement is there is a requirement. I mean, we said that we want to be absolute leadership position in that. So that's the existing product on which thing will be R&D will be happening, and we'll be adding various weapon systems, etc., to enable that for the hard kill. And in the case of simulators, we will keep adding new simulators as the world friendly armies ask us. We'll add new product, do new R&D also. But even in the case of simulators also, there may be some more R&D required for existing products, for a customization for some other forces. So yeah, it will be a combination of both new product R&D and existing products maintenance and improvement. But again, so this will and this we do expect R&D prices, R&D as a percentage of the sales to at least reach the old percentage. Maybe about we are now at about 5% is what I think. We need to improve that a bit. Yeah.
Sure, thanks. That will be all from my side.
Thank you.
Thank you. We have a next question from Deepen Vakil from Incred Equities. Please go ahead.
Hello, am I audible?
Yes.
So my first question is on the lines of so we operate in three segments, namely simulators, anti-drone, and AMC. So can you help us with the blended execution timeline for each three? Like how are they different from one another?
So simulators and anti-drone systems are actually the equipment. Annual maintenance contracts are the services that we render post warranty. So it's a derivative of the primary equipment sale. So our typical the timeline to execute this order may be anywhere between 6 months to 18 months, depending on the quantity and the complexity of the equipment. So, but that is what the typical timeline has been, that we execute most of the orders within 18 months.
Okay, so my next question is on your order book. So, what would be the proportion of exports in the current order book? And you mentioned that export will be garnering more and more traction going ahead. So, what is the kind of pipeline that we are looking at, considering the competition intensity is rising, especially in the domestic front?
So it's export order book position is around 35%. Maybe little higher or plus or minus a bit. So 35. So we expect that slowly the requirement from the export market is going to increase. We see the kind of turmoil that's there in Middle East, Russia, Ukraine, and other countries. So everybody at this point in time is worried about war happening, and we are worried that they're not prepared enough for the war. So training simulation comes into the training simulation equipment comes there. And the second thing is the wars that are happening are extensively using drones as a counter. It's almost a change between swords to gunfighting. So I keep saying that. So if you with this happening, the how do you protect yourself? Again, counter drone solutions from Zen are the things. So this increase in war requiring combat readiness, and the second increase in drone using counter drone system, these are the two major factors in every country's armies today, armed forces today. So we are the sweet spot where we are able to use both of them for preparing a country's India's friendly nations and India itself to counter the threats that will emerge in case of a war.
Got it, sir. Thank you so much for answering my questions and all the best.
Thank you. Thank you so much.
Thank you. We have a next question from Narayan Singh from Navanand Securities. Please go ahead.
Hello.
Mr. Narayan Singh?
Hello.
Yeah, we can hear you. Please go ahead.
Sorry. Yeah, thank you for taking my call. Hello, sir, Mr. Atuluri. Congratulations on good set of numbers. I mean, so in the beginning, I wanted to ask a question about the QIP, but after so many participants asked the similar questions, I got a little bit of clarity on the purpose of QIP, and or let's say at least this is just enabler. So still, I want to raise this question to you. So when I first looked at in the past history, you bought the shares from the market to have it for ESOP. And so that really clearly showed me how much you value the capital of the company, and you are not really willing to let go of the equity so easily of your company. So I still think that if you're talking about so much prospects for the company in the next 3 years, I just uh, wish that whatever acquisition we make is really adding big value to the company and shareholders. That's all I have. So I don't have any other question actually.
Thank you, Narayan. But very good point, Narayan. I'm allergic to issuing shares. And one of the question that the earlier question was, if you are so confident, why are you selling the shares of the, somebody may be going on in the mind that, why are you selling? Why did the promoter sell? Why couldn't they wait? Kind of thing, which is connected to your question. But the fact is, as a promoter, I have this thing. We should leave something on the table for the next investor who's coming. So this is my attitude, and but very good question. I am really, I don't like, it's basically if we issue shares at a low price, it's actually shortchanging the existing shareholders. We are actually, kind of cheating them. So the only way I could, think was, just let us buy back from the market, whichever is coming naturally, and then give to the employees rather than issuing fresh, which looks actually very cheap. Issuing new shares looks costless, but there is huge cost involved in that. A lot of people don't appreciate it, but very good question. Thank you, Narayan. I appreciate it.
Thank you very much, sir, and all the best.
Thank you. Thank you.
Thank you. The next question is from Rohit Singh from Invest Analytics Advisory LLP. Please go ahead. Mr.
Thank
Rohit
you,
Singh?
sir. I am audible.
Yes, please
Yes,
go ahead.
please.
Sir, my question is what is the purpose of raising 1000 crore and how will it benefit the company?
Yeah, okay. So, I've been, I briefly explained to other team members, but, so again, we are not raising 1,000 crores. This is an enabling provision. If if we are able to find a target that will benefit the shareholders, the company, shareholders and the company, we will definitely be looking at acquiring. So this was just to reduce the time to raise the funds because the exclusivity period is given for a very small window. So we wanted to be ready to raise the funds at a short notice. Again, we don't have any target in hand or in front of our eyes, but the moment we get it, we'll start moving it, and we'll ensure, and only after ensuring that this is very, very beneficial to the company.
Mr. Singh, does that answer your question?
Thank you, sir.
Thank
Yes,
you.
sir. Thank you, sir.
We have our next
Thank you.
question, Harsh M from Chris Portfolio. Please go ahead.
Hello, am I audible?
Yes.
Congratulations on great set of numbers. I just have a small question for the QIB. Most of it has been answered. What is the typical size of the target companies which you're looking at? And I understand that this is an enabling provision from your end. So would you be open to even take some debt to fund a small acquisition? Or how is it, which is on your mind?
So we have an enabling provision for debt also. So it probably would be a combination of debt and debt and equity. If it's a very small acquisition, probably we'll just go with debt. We'll not go to raise equity. And the second thing is that what is the size of the target size? I don't think they'll exceed 500 crores in any case, but maybe in that region is what we are thinking. But we will be, depending on the exact target, we can actually come to a conclusion at that point in time. But I would say that 500 crores would be the kind of maximum size. But again, the reality when the actual opportunity comes, we will respond to that opportunity based on the merits of the opportunity, and don't hold me to the maximum size then.
Got it. Got it. Fair. And so how many companies are you evaluating? And I'm assuming these would be across the globe, right? Not
So
just.
across the globe, yeah, both internet. So I mean, there's no point in telling the number of the companies. Even if we acquire one, it should be great, But yeah, we are evaluating some companies at this point in time. So, but I think we should know in the next year or so what are those companies. If they come to some kind of fruition, then we'll be able to disclose the names at that point in time. I'm sorry, I don't really don't want to give the numbers on that, Harsh.
No
I hope
problem.
you don't mind.
Yes, yes, yes. Perfect. Thank best. So,
Thank you, Harsh.
Thank you. The next question is from Gautam Bahal from Morian Capital. Please go ahead.
Hi, am I audible?
Yes,
Yes,
Mr. Bahal,
Gautam, yeah.
please go ahead.
Hi, thanks for taking my question. Sir, it's very good to hear you quote Peter Lynch. So I'll ask you a Peter Lynch type question about basic arithmetic on your guidance. Sir, you've effectively guided for almost a 10x revenue growth in the next few years. But you're still saying that your EBITDA margin will be the same as it is today. Now, that's only possible if your gross margin compresses a lot or your OpEx balloons a lot. I mean, so tell me which one is it, right? Or are you just being super conservative?
No, so I am being super conservative, but very very frankly, the when you get into bigger size things, I do expect some unexpected competition to come in where we have to compete against them, and then we have seen hell in 20 and 23 when COVID came and all our calculation went haywire. So, so these uncertainties added to the fact that we are growing, we will go into new markets, export markets, and so we are right. It's a combination of the three that, the OPEX may increase because of the uncertain factors. Competition may come in, and third, that what was the third point you said? Even that may happen in the sense that pressure may come in from other competitors also. Yeah.
Okay. Okay.
And
No,
we
fair
are being
enough,
super
sir.
conservative. We are being super conservative.
Okay. Okay. No, sir, it's whatever your answers have been so far in this conference call, and most of my questions have already been answered, but
Okay.
your clear preference to sort of protect the equity capital of the business is very appreciated by shareholders. So thank you very much, and best of luck.
Gautam, thank you so much, Gautam. Thank you. Thank you. Appreciate it, Gautam. Thank you.
Thank you. We have a next question from Tirth Gosar from Swan Investments. Please go ahead.
Hello, sir. Congratulations on a great set of numbers. So, I would like to understand the first thing I would like to understand is that what is driving this kind of growth that you are targeting for the next 5 years?
So, very frankly, I think these are the macro conditions that are helping us. And of course, the current government has really focused on IDDM, saying that it should be indigenously designed and developed. You will not believe that for almost 20 years, from the initial conception of the company, we have been begging people that manufacturing is not the key area, that you make in India is not, it really doesn't matter. Even if it is made in China, it is all right. But own the design, own the IP of the company is what we have been saying. It doesn't matter whether Apple gives to Foxconn in China, Foxconn in Taiwan, or Foxconn in India. The most value capture is done by Apple because they have designed and developed. And so we have been telling these companies, the government for please change it to category where IP development is given a lot of preference. It fell on deaf ears for 20 years, but in 2015, Mr. Parikar came and he understood just like that. He said, okay, IP is the place where we should play the game, and he introduced the category called IDDM. And that is where everything we think starts. And the second category was make two. Both were initiated by us, and both the categories Parikar, because he himself has been a small businessman and has gone through all the rigmarole of this tortuous three vendor situation, etc. He was able to get it like that, and that is when everything changed for us. Of course, this government is very pro. Once they understand, they are willing to implement it. So we think that is where the benefit has come from us. This is what has changed the outlook from the government. And the second thing is the worldwide picture. The worldwide this war was not expected everywhere. You see it started with Armenia, Azerbaijan. Azerbaijan just first Armenia Azerbaijan war took 6 years. The current one with drones took 44 days. Ukraine and Russia, the war is going on and on and on, and the most used tool there is drones. Again, you see in Israel, same thing is happening. So, because of these global factors also, and this domestic support from the wonderful support from the government, we have accelerated growth currently, and we expect that this is going to continue. And people are just waking up to these dangers of unpreparedness and drones. So we think the growth is going to be significant in the next 5 years, and it's the inflection. This is the inflection. Hockey stick growth is just starting, is what we feel. And by the way, also a third party, like if you see Bharat Shakti conclave, the chief of army has said on many occasions that simulator training is absolutely important for us, and it has just started. So the 1,000 crore, 1,500 crore orders that we have is just a starting tip of the iceberg. We think there's a lot of this proliferation of simulators across the armed forces to be done, and we will be getting that business as we go ahead. So that's my basis for confidence for the growth in the next 5 years.
Okay, sir. So I understood that all this growth that you are guiding will be organic. That will be from your existing
Absolutely,
businesses, right?
yes.
Okay. And what kind of investments would you need to achieve this growth that you would need to make?
So again, we what we say is as far as the plant and machinery and the core production activities are there, we outsource the supply chain. We have a very robust supply chain. We outsource to them, and we have a team that is just monitoring the supply chain, expanding the supply chain, and ensuring that the supply chain is seamlessly integrated with Zen's delivery system. So we will be doing so. The growth will be taken care of that. So, but what kind of investments could be are, one thing is R&D investment may be accelerated. We will be requiring therefore and ensuring that the equipment meet the requirement of the foreign government. Second is anti-drone system. We want to take it to the global level leadership position. We will be investing there. And the third is for even for when finally everything is manufactured and we get into our system, we will need some place to integrate and test the system. So there may be some kind of a physical infrastructure. Again, we don't need land for that. We need mostly buildings for that on the land that we already own. So this will be the expenditure that we may have to incur to ensure this growth.
Okay, so majority of your capex, majority of the manufacturing will be done outsourced. So,
Yeah, that's right. We now, as we are doing now, 85% or more is outsourced at this point in time. We'll continue to do that.
okay, okay. Thank you.
Thank you, Tir.
Thank you. We have a next question from Ashish Soni from Family Office. Please go ahead.
Hi. Sir, one quick question. Once you strategic roadmap perspective, you're saying you'll go export to 50%, but what's our right to win against the global competition? Because India, I think the your positioning is like you own the IP, your policies are favoring, but what's our thought process regarding that in global?
So this is what I said in the earlier question. Somebody said, so for the first 20 years of our life, we didn't have any preference from the Indian government actually. So there used to be actually say two statements that were made. I want the best for my boys, and the second was there is no runner up in war. And so what they would use, these two sentences were used to buy the best equipment that was available, and they said this is the only way to go. And there is one country in the world that used to say that that even if my country's company is 60% good, we will buy from them because that will allow me to reinvest and make in better system. And India has been following this policy forever. We want the best, no runners up policy. And this country B, which was following the 60% is enough, some kind of functionality, then I'll buy only from my country's company, was Israel. You see where Israel is today in terms of products and in terms of technology, and where India was some 8 years back. Today we are playing a catch-up game. We are trying to becoming number one in many categories. In land forces simulators, India is number one. And of course, Zen is a major reason for that. But there are other things also where we are emerging as number one. So the export, when we go, the thing is that we are absolutely the number one. Only thing is there will be more political reason. For example, in NATO countries, you cannot sell to NATO, any of the NATO countries, if you are outside NATO. And but these guys will come and preach us, you should have open policy for importing defense equipment into India. But now what is happening? But what about the other countries like Africa, Middle East, CIS countries, Southeast Asia? They would love to buy from a country like India once we are able to prove the quality and say, boss, listen, our quality is better. We are competed with them, and these are our products. They would love to buy from us because they are not only India is not only in terms of quality and technology better than those companies, but also we are more reliable partner to them. So this is we think that export is a very very major growth, and if then place cards, the growth projection that I am giving will look like a joke after some time. They will be much higher than what we are projecting.
And in terms of acquisition, I think any particular potential area you're looking for acquisition in terms of your value add when you say like it's a
So
drone system or something
related
like
to
that?
the Zen, it will be one thing is we know the customer very well is the armed forces, so it should be armed forces focused companies and something related to the product that we are already doing. These are the two things.
So is it like drone sort of system or any particular area? Just give us an idea of the area where you're thinking.
छोड़ दे भाई मेरे को बस ठीक है. So I mean,
Okay.
I'm not able to tell more than this at this point in time.
Sure, fine. That's fine.
Thank you so much, Abhi. Ashish,
Thank
thank you.
you. We have a next question from Lavnish Mohan from Zar Capital. Please go ahead.
Yeah, good evening. Can you hear me?
Yeah, Lavnish, I can hear you. Go ahead.
Okay. Congratulations on a great set of numbers, and very hearty to listen to you about how carefully you're looking at the entire QIP process. and the fact that this is currently at this point an enabling provision. The minute we saw this announcement, we were slightly taken aback as to, such a large number. Are we sort of chewing more than what we can, gulp down our throats? But I think you have given enough clarity. Thank you for that. My question is on the Goa research, Goa investment that the company is signing into. Uh, the 50 crore number, where will it be spent? What kind of products are we going to make? Is it going to be for the domestic or the export market?
So, again, this is we will be investing. This are approximate investment that we have suggested. But we will be creating the facility to supplement what we have in Hyderabad, and this is also a specific. This is also a place where we are de-risking the geographical. Everything is in Hyderabad at this point in time for the R&D, production, everything. So, so one of the export customers was, what happens if there is, there is a shutdown in Hyderabad? Where do I go? At least physically, forget about another part of the country, world, but can you be in another part of the country? So they wanted this geographical, and but I believe this is a question a lot of big countries ask. What is Plan B if something happens there? So this is just a backup kind of thing that we are looking at in Goa, and this will be complementing the Zen whenever it is finished, when it is whenever we start the operations there, start building the facility there. It will be with a clear picture that it will be, this is the purpose, de-risking the geography and playing a complementary role with the Hyderabad facility.
Okay, thank you so much.
Yeah, thank you.
Thank you. We have a next question from Abhishek Shah from Ambit. Please go ahead.
Hi, sir. Thank you again for taking another question from me. I just had a question. I was going through the numbers. So, on the tax rate, we are currently paying at about 30 odd percent tax. I was just wondering, shouldn't that actually technically be lower at around 25 odd percent? Any particular reason for that?
Yeah, I'll let CFO Mr. Afzal answer that. Afzal,
Sir,
you're on mute.
Still on mute.
One moment, sir. Mr. Afzal, can you speak now, please?
Yes, yeah. Can you hear me? Yeah.
Yes.
Yes.
Yeah. So this is due to this higher utilization of the MAT credit in first 9 months. Otherwise, we are in a tax bracket of about 29.12%, including all this surcharge and all. But yes, you are right. It is on a little bit on lower side due to the higher utilization of MAT credit.
Okay. All right. Thank you.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I now hand the conference over to management for closing comments. Over to you, sir.
Thank you so much for the opportunity to interact with shareholders. I love interacting with my shareholders, and when in-person meeting was there, one of the uh, most looked event was the annual general meeting. But now it becoming online, it's very exciting even still now. And so uh, we are again confident that we'll be able to achieve the target for this year, and we have already given the target for the next year also. And we expect that the macro factor that's ongoing will ensure that we get the CAGR growth rate of 50% at least in the next from FY26 to 28. So I hope I have answered some of the questions that could be answered, and I look forward to your continued support. And we have a lovely bunch of shareholders. I want them to continue to be with Zen in the foreseeable future. We think the party has just started, and we there is a huge growth prospect for Zen from here on. Thank you so much for the call.
Thank you. On behalf of Zen Technologies Limited, that concludes this conference. Thank you for joining us, and you may now exit the meeting.